Welcome to the Radix Review. Tune in each week as co-hosts Jay Denton and Chris Nebenzal cover the key trends in the apartment industry, macroeconomy, and much more. Hello, everyone, and welcome. Today is June 27th. We are right about the halfway point in the year. Jay, what are we seeing in the market?
Chris, on today's podcast, we are going to cover a little bit of a recap of the National Apartment Association event that I was at last week. I know we gave a little bit of a preview in the last podcast. I'll follow up with what we discussed in some of those conversations. While I was out there, I know that you were digging into some of the new home sales data and have some few observations of how it might relate to multifamily, maybe more than people realize. We also, I know we don't talk in this podcast a lot about, specifically about the Radix product. We talk about the data from it, but there are some product things to talk about in terms of some new data that's going to be directly available in our system and some other ways that we'll be distributing it. And then we'll follow up with a new type of wild card. I'll talk about it more when we get there, but Chris is actually going to talk about the power grid and some of the things that he's wondering about in terms of that. So let's go ahead and kick it off. I'll jump straight into the National Apartment Association conference from last week. As those of you who tuned in the prior week know, I was out in Philadelphia. Tremendous conference, one of the largest ones in the industry. And really, we were meeting, specifically me and some of the team members that were there. We had a pretty large presence, meeting with a lot of owner and operators in terms of types of companies. And then the personas in terms of like who in those companies were we speaking with? A lot of folks in ops, asset management, revenue management, some others, but those were some of the main groups that were there that we were speaking with. And my main job, had people with different functions at the booth and a variety of other functions. My main job there was meeting and talking about what's happening in the apartment market and how it maybe is impacting their portfolio. So we started with some economic breakdowns. I thought, one of the things I really like to do, we talk a lot about what's happening in the economy and really try to distill it for like the audience. And sometimes we're speaking with property managers and talking about what's happening in the economy. Here I was talking to these senior leaders, and we were going through things like the Fed dot plot of what the FOMC members think interest rates are going to do, as we move forward throughout this year, maybe in coming years. So it's great to see some of that and really explain what it was. Explain what if the economy slows. I think one good news that I feel like is if it did, at least we're on a path where supply is already slowing ahead of an economic change. And so layering in maybe what that can mean within our forecast. From a market perspective, I'll kind of wrap up with that. There are a variety of different companies that we spoke with. Some were very single location or maybe regionally focused, so like Chicago or the Midwest, where others were coast to coast with all different types of quality of assets, different submarkets. And so they're all experiencing a few different things. And so what I really enjoyed about the session was being very interactive and being able to hop from one market to another with different submarket heat maps, what's happening with concessions, what our forecast showed. From that, I would say some of the insights, one, I like to add the perspective of we get so, whether it's inside our own company or others, you get so focused on what you're doing, sometimes you lose the broader perspective. And so that's part of what I hope to do as part of these sessions. So we would have a portfolio that was maybe in Chicago, and I started off talking about Denver and Austin and Raleigh. Like, well, why would you do that? And it's really to show just different ways and things that we're seeing in the market so that when we then go to talk about the client's market, and we didn't spend a ton of time on that, but just some quick examples so that they understood maybe how their situation compared to the broader context of multifamily.
So, Jay, what was the feedback that you got from these clients in these conversations? Did they agree with most of the insights that you were sharing, or were their portfolios perhaps seeing different trends than what our data was presenting?
I would say for their locations, they mostly felt like and understood what I was showing helped reinforce what they're experiencing. They might not have had that data point. They might not have seen it presented that way, but they were like, yes, that's my world. That's what I'm living in right now. I think what I help do is show, well, here's how it compares, and here's maybe a light at the end of the tunnel relative to what we're seeing in some other spots around the country. So I would mention I would often start in Denver, because Denver, it depends on where you're at in the market in terms of some places are really have an imbalance of supply and demand, whether there's a whole lot of supply, not very much demand, or both, at those different price points, where other parts of that market are performing very well. In other markets like in Austin, the whole market's really, really struggling. And so I would compare and contrast that. And then when I would go to show them their specific market, it was like, okay, and now not only that does that reinforce it, but I can see maybe what the path forward looks like for some of these locations.
Absolutely. Absolutely. So overall, it sounds like it was a really productive conference. I know I spoke with some of the other team members. Any final takeaways from NAA last week?
The conference floor was massive. I walked, my phone said I walked 24 miles in 4 days. Now, some of that was to the Liberty Bell and the Rocky statue and so on, but a massive floor with so many vendors. It was incredible. Great conference. I would say everyone, I mentioned this last week, despite some of the challenges in the industry, I'd say people felt pretty upbeat. And I think that they know that, there's some challenges right now, but they'll work through it. I think one of the other kind of side conversations I had was, when you step away from all this, and like, what are the other actions besides looking at the numbers? Some folks talking to me about they might have some lease up properties, and they really feel like their marketing isn't quite right. And that's why their traffic numbers specifically are down, or they're maybe not signing leases at the velocity they expected. So, getting into some deeper conversations into the why, I thought was for me very, very valuable.
Sounds good. Sounds good. Last question on Philly. Did you have any cheesesteaks while you were there?
Okay, I did, and I haven't even talked to you about this, I don't think. So after our last podcast, we were all just we knew we had to find a cheesesteak, and so we found one. This place that was at the terminal, I guess, where the train lets off, and there are all these restaurants crammed into this really tiny place. It's really neat, but everyone in there of all the restaurants seemed to be ordering cheesesteaks, and so everyone was in one spot. Now later, I was talking to someone actually from Philly. They told me that was not the place to go, and so it was serviceable. It was fine, but they said they gave me a recommendation on some place where the cheesesteaks, the ingredients they make it out of, it costs $100 plus for the cheesesteak, but is apparently incredible. The gentleman who told me had just taken his father for Father's Day because it's that special of a deal. So I don't remember the name of the place. I'm sure I can Google it and find out pretty fast, but perhaps that'll be on my list for next time to check out.
Sounds good. Sounds good. Always good to try and indulge in the local fare.
Well, while I was out there talking about all of that, I know that, with everything else you're doing, part of it, you had mentioned to me that you want to dig into some of the single family housing and home sales data. So what are some of the observations you have there to share?
Yeah, and oftentimes we, specific to what Radix does and our clientele, we kind of put blinders on and focus a little bit or exclusively on multifamily. We know what the supply is doing. We know what demand is doing. We know what rents and occupancy and the leading indicators are doing. And it's interesting because, as we've talked a lot about, we're in this generational supply boom in multifamily. We haven't added this many multifamily units on an annual basis since the 1980s. Yet at the same time, we're certainly in a overall housing shortage. That's single family rentals, that's single family for sale, all types of housing. We are undersupplied in terms of the overall housing market. And you're seeing that play out in different data sets. So last week we saw the May home sale data. Home sales of existing homes continue to decline. Home prices reached a new all-time high, 419,000 for the median home price in the US, up 55% from pre-pandemic levels back in February of 2020. So we're really kind of in this mixed situation in the housing industry. And when I think about it with my consumer hat on, it's really one housing market. Obviously, we think about it in terms of multifamily and perhaps even institutional grade multifamily. But the overarching dynamic is that we're not building enough homes. We've talked in the past about permitting levels and how single family permits are starting to rise, multifamily permits are starting to fall. And that's good news on the single family side. But again, I want to stress the lack of overall housing. And really, what we can see in our data in multifamily is that the housing affordability challenges can be cured or can be alleviated substantially with more supply, with a basic component of supply and demand, the relationship between supply and demand, as we've seen in places like Austin, like Charlotte, like Atlanta, like Nashville. When more supply is added, the pricing comes down, concessions rise, and it loosens the overall housing industry. The data that we're seeing, especially in places like the Northeast and Midwest, home prices are up 9.2% year on year in the Northeast. Home prices are up 6.4% in the Midwest. That's actually very much in line with what our rental data is showing too, that actually the Northeast and the Midwest are having their moment in the sun right now for rent growth, for housing demand. So while our specific industry, we're going through a period of softness, it's really going to be short lived. Absorption remains strong. We are seeing supply slow down, and I expect rent performance to bounce back very quickly. Now, that is good news for our clients, no doubt about it. But when we look at the entire housing industry holistically, when we get into affordability challenges like we're seeing on the for sale side, and what we perhaps may see as supply slows down on the multifamily side, we bring in challenges like regulatory burdens, rent control, other type of regulations that limit housing development. And really what I can see going forward fairly clearly is the more regulation that we add on to try to combat housing affordability, actually the less development we're going to have. It's a vicious cycle that kind of spirals downward, making things less affordable, weakening the quality of the overall housing stock. And so as I look at not only the multifamily data, it's a good example of what can be done across the housing industry, but we see in the single family data more and more evidence of the need for more housing. And I expect that will be kind of a hotbed issue in the coming election as well.
I know, echoing some of what you talked about there, one of the things that the presentations that we gave at the conference last week, part of it was new supply. And like you said, I did not just want to focus on what was happening with multifamily, but bring in single family and then total supply. In particular, we were looking at permitting numbers, which are more of a leading indicator of what's going to happen, in terms of deliveries down the road. But practically every market that we looked at, you saw just what you said. Multifamily was trending down, which means supply will clear out here in a year or two. Single family ticking up. And I had this anecdotal conversation with someone who was actually in the group that I was presenting to. Oddly enough, out of everywhere in the country, this gentleman just tried to buy a house in the same kind of neighborhood or city where I'm located. I don't live in a real big city. It's one of the smaller suburbs, kind of west of DFW Airport in Dallas. And, as I've mentioned before on this podcast and other conversations, I just bought a home earlier in the year. It was hard to swallow that 6.6 interest rate, but just to get a house, just to win a bid without some, what I would say like outlandish bid about outbidding everyone, was I felt pretty lucky actually at the time. And so, speaking with this gentleman, he had just tried to purchase probably multiple times, but the latest time he at least tried to purchase a home, he said there were 14 bids, probably almost immediately, 11 over asking price. And it's just very difficult if you're in the housing market to get a house because there's just so much competition from people, they can't buy homes. And so, what the permitting data says and everything else that I read echoes what this gentleman's experience was. It's so hard to buy an existing home. They're just going out and they're finding a builder and they're building one somewhere likely further away from the city. And so that's what he was doing. And it just, it tied perfectly to, I think, the story that generally we expect that we're seeing. It's what the data says. And then you have these conversations. It seems like that's what real life is as well.
Absolutely. And as we continue to see the multifamily and single family permitting data ebb and flow, going back multiple cycles, those two metrics often go opposite of one another. But as we look at the data and as we look at the demand number, specifically, the number of units undersupplied in the total housing market, depending on the source, we're somewhere between 4 and 8 million total units undersupplied. We can't really afford to have that ebb and flow. We actually need multifamily permits and single family permits to be rising in unison if we're going to overcome the housing shortage that we currently have. NMHC put out research a number of years ago saying we needed about 3.5 million housing units by 2035. That number has certainly risen since that study was initially put out, and we just haven't had the the supply to meet that. Now, unfortunately, with interest rates still being high, I think developers are even more hesitant to start new projects, whether it's a single family community, a multifamily community, one-off single family homes. So we're in a bit of a quagmire here, with our industry and the overall housing industry. Again, I think the way out is to build, but we're in a pretty tough situation going forward. So, Jay, switching gears, I know you had mentioned wanting to talk about one of the new product enhancements and product features that we're going to be rolling out in Radix. We had a pretty big announcement at NAA. Fill in the listeners on what's going on there.
Yeah, one of the reasons I wanted to mention it's something that you and I are going to get to use as analysts, economists, those who are consuming data and figuring out what's happening out there in the market. We announced at NAA that we will be making data that we are collecting via the internet through property websites and so on, that type of data available within our product within the next, say, 30 days is the target date for that. But ahead of that, I believe by July 1st, we will be making that information available directly through more of a raw data format. So for clients that are able to consume it, maybe they have a BI team or a research team and they're able to consume it in some of their existing reporting structures, that will be available a little bit sooner. But again, also available directly within our benchmark product coming very, very soon. This is something, an initiative that's been under the way for a while, and we're just getting right there to the finish line of being able to launch it. And so that's what the announcement was last week. And we'll be excited for our clients to really start to supplement some of the other, I think, very robust, accurate data that we already have. This is just something, again, that was on our roadmap that we thought we'd add to the product as well.
That's awesome. That's awesome. And as data nerds, I know you're excited. I'm excited as well to get my hands on some more data, and for our clients as well. I know it doesn't include all of the data that we currently have. It doesn't include concessions, but allowing our clients to consume that data in its raw form, in the not the PDF, the flat file that you mentioned. That's going to be a huge advantage. So really looking forward to that.
Yeah, and so Chris, let's wrap it up. We thought we'd try a little bit different segment for the wild card this week, and one of those. What are you thinking about? What are you researching? What's on your mind? You wish you knew more about, and you're starting to explore. And so you had mentioned to me something about the power grid. I thought that's an excellent topic. Let's use that for our first one. So go ahead and tee it up for us.
Yeah, the thermometers are rising. The temperature is getting hot here in Denver. It's been in the 90s for the past week. The air conditioning is running pretty consistently, and so it popped to the top of my mind. What's going on with the grid or the multiple grids that we have here in the U.S. It seems like it's a really hot button issue for a number of media outlets as well, talking about things like AI data centers and electric vehicles, battery storage, electricity consumption and storage. And it's really got me thinking, how does this impact what we've been talking about, the housing market, the multifamily market? You mentioned the sprawl of Dallas, and there's probably no market in the country that better exemplifies urban sprawl as the Metroplex continues to grow and grow to the north and south. The same thing could be said here in Denver with kind of the I-25 corridor spreading out very quickly. It's what we've discussed needs to happen in terms of continued development for housing, for infrastructure. But one of the things I wonder about is, do we have the grid to support that? We've made a concerted effort to not only produce our own energy here in the U.S., but move to a more green energy, less reliant on fossil fuels. But even so, everything that I've been seeing, everything that I've been reading says we need energy in all forms, all types to meet the need of these data centers, of increased reliance on technology, of AI and computing power. So I'm by no means an expert. I'm digging into it daily. I'm fascinated by this. But as you mentioned, kind of the continued growth of cities, I think that's really going to depend on the health of the grid. And Texas has its own grid. The East has its own grid. The West has its own grid. Thinking about energy production as well. West Texas, Wyoming have tons of wind, not huge population centers. I know there's challenge around solar panels and solar farms in certain parts of the country. offshore wind farms in the Northeast. Those can be located close to population centers, but there's all sorts of debate over the viability and the likelihood of developing those in places along the Atlantic. So again, I don't think this impacts our industry today, tomorrow, but certainly as we look over the next couple of years, the next 10 to 15 years beyond that, the power grid is going to play a huge role on what cities can grow, what cities can outperform, and who's going to have access and ability to power up their markets, really.
Yeah, well, if you figure all that out, let the folks here in Texas know about it. I suffered through that major storm that we had a couple years ago where we lost power. I think I lost power for a week. It would come on for about 2 hours at a time. The temperatures were maybe in the single digits and the teens for an extended period with snow on the ground and so on. Thankfully, my wife and kids were able to get a hotel room down the street. I toughed it out with the 2 dogs and the cat. So lots of anecdotal stories around energy here in Texas. That's one of them. Apparently, by the way, as I understand it, part of the issue that happened there was the cold front went so far down, all the way down to the coast, that it just stressed it from, people who normally wouldn't be running their heater had to run it because of how cold it was for how long. And so certainly a topic here with the 100-degree days that are ahead of us, and the EV that I have, I know you've got one as well. And so certainly I think about that, all the, the podcasts that I listen to and talk about all the computing power we'll need for AI. It's a presidential topic. It might not be on the top of the list, but when I hear some of the discussion going on, it is one in terms of how we're going to solve this problem overall. So yeah, I think it's a very, very interesting thing to explore more of. I'm glad you're looking into it.
Absolutely. All right, Jay, well, we can wrap up there. Any final thoughts for the week before we conclude?
No, getting ready for 4th of July. I know we'll have a podcast going ahead and coming out that week. So we're getting almost a holiday season, and going to be excited. If we do not see or hear from some of the main people we interact with, we will see you on the other side of it.
Sounds good. And yeah, we'll be covering the first half of the year, the data that we have for the first 6 months next week, as well as diving into 4th of July plans. So thanks, Jay. And thanks everyone for listening and supporting the podcast. We'll be back again next week.